This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The increase in OPEC's oil output in December has again undershot the rise planned under a deal with allies, a Reuters survey found on Thursday, highlighting capacity constraints that are limiting supply as global demand recovers from the pandemic. The Organization of the Petroleum Exporting Countries, OPEC, pumped 27.80 million barrels per day, BPD, in December, the survey found, up 70,000 barrels of oil per day from the previous month but short of the 253,000 barrels of oil per day increase allowed under the supply deal. OPEC and its allies, a group known as OPEC+, are gradually relaxing 2020's output cuts as demand recovers from 2020's collapse. But many smaller producers can't raise supply and others have been wary of pumping too much in case of renewed COVID-19 setbacks.
The world's top oil exporter, Saudi Arabia, has cut February's official selling price, OSP, to Asia for its Arab light crude to plus $2.20 a barrel versus Oman, Dubai crude. The February OSP to Asia for the Arab light grade is the lowest in 3 months. State oil giant Saudi Aramco on Thursday set the February OSP for Arab light crude to Asia $1.10 lower than the previous month, confirming what sources told Reuters earlier.
Moving on to the top news in the energy sector.
Major Indonesian coal miners have sought exemptions from a coal export ban put in place at the start of the year as the costs of having scores of ships stranded offshore continue to mount. The world's biggest thermal coal exporter implemented the ban to avoid domestic power outages, triggering concerns for its biggest customers, such as China and Japan, just as they head into the peak winter period for electricity demand. The Indonesian government had pledged to start a review of the ban on Wednesday, but talks were postponed and Energy Ministry officials on Thursday said it was unclear when they might decide to end the ban.
U.S. crude oil stockpiles fell last week while gasoline inventories surged by more than 10 million barrels, the biggest weekly build since April 2020, as supplies backed up at refineries due to reduced fuel demand at the end of the year. U.S. gasoline stocks jumped by 10.1 million barrels in the week to December 31 to 232.8 million barrels, the Energy Information Administration said on Wednesday, compared with expectations in a Reuters poll for a 1.8 million barrel rise. Analysts attributed the surprising gasoline build to steady refining production, combined with a fall-off in demand due to the coronavirus Omicron variant. Next, we have the top news in metal. Indonesian President Joko Widodo said on Thursday more than 2,000 mining, plantation and forest use permits have been revoked due to non-compliance or because they had been unused, tightening oversight of the nation's natural resources. Jokowi, as the president is known, said in a broadcast the action was taken to improve governance and transparency in the rich natural resources sector. The permits revoked include 1,776 in metals and minerals mining, 302 in coal mining, as well as in forestry and plantations that cover more than 3 million hectares of land, spread across the archipelago.
Kazatomprom, the world's biggest uranium producer, said on Thursday it was operating normally with no impact on output or exports despite unrest in Kazakhstan. Uranium prices have risen after unrest in Kazakhstan, which was spurred initially by protests against fuel price hikes. Spot prices hit $45.50 per pound on Wednesday, the highest since November 30, according to a Platts assessment. But the Central Asian country's political turmoil does not seem to have so far affected key industries. Uranium mining is going according to plan. There have been no stoppages. The company is fulfilling its export contracts, a Kazatomprom spokesperson said.
We will now look at the top news in the agricultural sector.
World food prices jumped 28% in 2021 to their highest level in a decade, and hopes for a return to more stable market conditions this year are slim, the UN's food agency said on Thursday. The Food and Agriculture Organization's FAO Food Price Index, which tracks the most globally traded food commodities, averaged 125.7 points in 2021, the highest since 131.9 in 2011. The monthly index eased slightly in December but had climbed for the previous 4 months in a row, reflecting harvest setbacks and strong demand over the past year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.